Alright, so today's video is going to be about two phenomenal companies. However, oh man, there's some drama right now in the US stock market, and me personally, I'm enjoying the show. And the reason I'm enjoying the show is because, one, I'm a long-term investor in many companies, and this is just part of the game. So if you are very much in the same boat as you are building great positions for great companies, well, this is probably nothing new for you, although a lot of people are very scared right now because they're not really understanding what is going on. So I'm going to go ahead and break down Google's earnings, pretty much what is causing their downward pressure right now of being down, oh boy, 7% on today when they came out with phenomenal numbers, record-breaking numbers for the companies. I mean, overall, their quarters for their earnings, their balance sheet is amazing. Their cloud service is growing at a rapid rate, and nobody knows really how high it can go. But yet, their stock is down by 7%. And then the next company that I want to get into is a company that I own, is ServiceNow. Very much software related company, but they've been really much mixed into a AI integrated software company, very different than like a traditional software company. So they dropped earnings yesterday too after the bell. Same thing with Google. So the second half of today's video, I want to get into ServiceNow. Pretty much talk about what my opinions on the company are, pretty much what I'm doing personally for my positions and what I can really see into the future. I don't have a crystal ball. I'm not God. I can't predict the future here. I'm also not a financial advisor. I'm a retail investor, retail trader. So if you're like me, that is very much out of Wall Street, and you're going through all these earnings, you're listening to conference calls, it can be very stressful. Not to mention another stressful thing is there's a lot of stuff happening in the Middle East. Oil is now above 90, which is bearish. I've been talking about this a lot, and if you like my videos and want to follow me on this YouTube channel, smash the like button, click the subscribe button, entirely free to do so. Help me grow this YouTube channel. My main YouTube channel is a video game channel, 200,000 subscribers, Nightmare RH. My gaming viewers, they're not interested really in the stock market. I really don't blame them because the stock market right now is unpopular, very unpopular. And it's primarily because of what is happening to like Google. Google is, well, it's part of the Magnificent Seven companies for a reason, or the Mag Five. Not sure. It's either Mag 7 or Mag 5, but it's a magnificent company. It's not going away anytime soon. They're very much perceived as still a growth company. I very much look more so at Meta as being a better growth company and kind of like the Mag 5 companies. Obviously, Meta, they have a 30 plus compound annual growth rates compared to pretty much Google. But I mean, Google, they're still growing, and they did grow year over year, quarter over quarter. And I mean, what is going on? How can a company come out and smash, karate chop? By the way, if you have never ever listened to a earnings call by Google before, it is utterly boring like you can't imagine. I was listening to their earnings call last night when I was actually making dinner in my kitchen, and I had my iPad pretty much up on my countertop, and I'm just listening to their earnings call. And yes, Google's earnings call is very boring for the first, like, I want to say probably 20-ish minutes. You're just listening to data. It's all data. It's just, but then again, a lot of earnings calls are like that too. So if you never listen to an earnings call, understand Google, it's very monotone, okay? But I mean, the numbers are utterly phenomenal, utterly crazy. So what is going on? Well, what do the headlines pretty much say around Google? Well, the headlines, well, they're not wrong. And the headlines are basically pretty much saying this. Well, Google Cloud's business did explode. Once again, nobody has a real clear picture of where their cloud business is going to. You're talking about their cloud business is up by 82%. That is incredible. But what else did Google do? Well, Google, they have raised their capital expenditure. Oh, yeah. They have raised their capital expenditure. Now they're at $205 billion. Earlier this year, Google gave the street pretty much that they're going to be spending $180 billion. They just upped their CapEx numbers. Google has literally gone up on the amount of money they're spending. If you're new to the market, to really sum everything up, we're in a very unique situation. But then again, it's really not a unique situation. This is what happens in the world. Whenever there is something being built out, during the 90s and 2000s, obviously you had very much the internet being built out. Primarily, all that money was around pretty much like the middle 90s. But anything regarding the AI infrastructure build out is going to be benefiting because that's where the money is going. What companies in the world are spending the most money on AI chips and building their data centers? Google, $205 billion now. Meta, they're at, Meta's going to be reporting earnings next week. We really don't even know, but I mean, initially Meta was going to be at like 110, 120. Now they're pushing for 140. Maybe they raise it to 160. So you got Meta. Amazon is at 200 bill. However, they're probably going to go up. And then you also have Microsoft, which, don't quote me on this, I believe Microsoft is at 100 bill, but that can also go up. So you have the world's greatest companies spending a phenomenal amount of money. Like, when you go ahead and say it out loud, it doesn't really seem like a lot until you take a step back and you're like, wait a second, I just said 200 billion out loud. Holy banana farts. That's a lot of money. Okay, $200 billion, that doesn't like just appear out of nowhere. There are countries around the world that are not even worth $200 billion as a country, okay? If you had $200 billion, theoretically, you very well could buy an island somewhere and start a country. I mean, as crazy as that sounds, right? Yes, you could buy a legitimate island and you could start a country. As crazy as that may sound, okay? So the thing about it is that where is all that money going? Actually, let me take a step back before I talk about where the money is going. What happens when a company is spending so much friggin' money? Well, their cash flow is going to turn into pretty much negative. And the thing about companies like Meta, the thing about companies like friggin' Amazon, Microsoft, Google, is that these companies have always been like very safe haven kind of companies because they produce so much money. They don't really need to like dilute shareholder value, pretty much raising, money on the open market. They can very much rebuy back shares. Well, guess what? Google, their free cash flow right now has very much gone to the downside. So if you ever hear that term, well, their free cash flow as a company is very much in the negative now, what does that mean? Keep the numbers simple. Let's say that you make $75,000 per year and you spend $50,000 per year and you have $25,000 left over. You can use that money for vacations. You can use that money to pretty much invest in stocks, maybe put aside to buy a piece of real estate, buy precious metals, do whatever. Maybe buy a new car. You have $25,000 left of capital at the end of the year. That's really good. Okay, the vast majority of Americans, whatever money you make, we tend to really like spend and stuff, okay? So, that's pretty much how I was all throughout like my young 20s. I'm 38 now, been very much in the stock market since I was 30, 31. So all throughout my young 20s, up until really about the age of like, I want to say 25-ish, I was literally making a ton of money, but I was also spending a ton of money as well too. Now, on the flip side, picture that you make $75,000 a year. However, you are spending $75,000 per year. How much money do you have left over? You got zero. Now, let's say you make $75,000 a year, but now you're spending $100,000 per year. Where is that $25,000 extra coming from? Well, if you're a publicly traded company, you're going to be getting it from your shareholders. Or you can take out debt. Yes, I've been there, done that. In my early 20s, I needed more money, so I had to take out some debt. Had a lot of car problems. So, hey, I'm having some car problems. I got to take out debt. Sucks, right? But it happens. It is no different than publicly traded companies. So these companies, they're getting to a threshold where they're going to have a hard time continuously spending CapEx money. And this is where a lot of people in the market, they are literally saying this AI build out is going to go on forever. Those people are the perma bulls around Nvidia. They're the perma bulls around AMD. They're the perma bulls around the AI build out companies. The answer is no, because the people that are spending the money, they cannot continue to spend money like this forever. It doesn't work like this, okay? When the money is going to be stopped being spent by Amazon, Google, Meta, Microsoft, you're gonna have the chips just they're gonna pull back. I'm not saying that they're gonna, it's obviously there's always gonna be CapEx spending, but the CapEx spending is not gonna be so aggressive like it is right now. That's the thing about it. People are not mad that Amazon, Google, Meta, Microsoft is spending money. By all means, that's how companies grow. People are mad because they're spending every penny plus more. $75,000 a year you're spending $100,000 per year. You're spending more money than you make, okay? That is why people are like, whoa, what is going on? Now, where is all this money going? Hundreds and hundreds of billions of dollars. Where is it going? Nvidia. Even though Nvidia is down today. Why is Nvidia down today? Because the entire market is, one, adjusting to very much the stuff in the Middle East. Oil is definitely being higher. So that is very much, a indicator to the market that, hey, we got some geopolitical stuff kicking back off again. We thought the Iran war was over. Now it's not. Okay. What's another reason? Well, how big is the market cap on Google? How big is the market cap on one of the world's best companies around? Their market cap is currently 3.86 trillion with a T. When a company loses 7%, the market feels it. You're talking about over $200 billion of money going down from that market cap. The overall market feels it, okay? Now, why isn't Nvidia up by 5-10% along with AMD? Because you have a company like Google that is spending more money. Shouldn't the chips be up? Where is the money going? Where is the $205 billion that Google is spending? Where is it going? Well, it's going into chips. It's going into AI infrastructure build-out companies. Nebulous, I just butchered their name. Disrespecting AI build-out companies. I don't own any AI build-out companies, but I do own AMD, and I also do own ServiceNow and various other companies. I'm not sure if I'm going to get to my public profile in this YouTube channel. If you want to see my public profile that dedicated for this YouTube channel, I believe it's like 2 videos ago. But pretty much the stocks I own publicly are here up on the screen. SoFi, AMD, Hood, Palantir, Meta, ServiceNow, Coinbase, Netflix, and also some crypto as well. So the thing about it is that all this money that's being spent The market is realizing that it can't go on forever. If you are a newbie to the stock market, been there, done that, like, it's okay, this is how you learn. But if you're a newbie to the stock market and you think that this spending can go on forever, you're going to be dead wrong. It's a cycle. We are in a cycle, okay? What was the previous cycle before the AI build out? Pretty much, what was the cycle during 2010, 2015, etc., etc.? To be honest, I really wasn't in the stock market then, but if you go back even further, pretty much there was a housing build out in the early 2000s, a massive melt up in homes, and then you go back to the 90s, you basically pretty much have the internet build out. It's a cycle. What is going to be next after this cycle? Robotics. Yeah, robotics. Robotics are going to be next. But right now, the chip cycle is here because these companies are just spending so much friggin' money. Tesla is also bringing the market down too. They got crushed on earnings. I mean, Tesla, you want to talk about a company with just a company cycle? Yeah, look at Tesla, okay? Everyone thought the Tesla cycle was going to be forever. Dead wrong. Look at Tesla. Honestly, Tesla could very much end up back at 280, 265. But I mean, you go back to Tesla, a Tesla build out. It was the EV build out. The EVs were a build out, and guess what? The EVs are really no longer a build out anymore. Otherwise, Tesla would just continue to go up, and Tesla is really not. Is Tesla a bad company? No. Tesla's a phenomenal company. But the cycle is very much over for Tesla. So, once again, the cycle someday is going to be over for AMD. I'm very much riding the AMD cycle up. And this is the growth cycle of a company. This is just really business 101. Every company in the world, whether it's private or public, they go through a growth cycle. They go up very, very quickly, and then you basically see what happens. Hey, are they going to be a value company? Are they growing maybe a couple % per year? Hey, you're a value company. Great company, nothing wrong with you. You're a value company. Are you a growth company? Growing insane % quarter over quarter, year over year? You're a growth company. Meta's a growth company. Do I think Google is a growth company? I really do. I really do believe that Google is a phenomenal growth company. However, they are experiencing a spending problem, okay? So right now, the market knows that this CapEx has continued to go on, but a lot of people that were in NVIDIA, maybe from like the beginning of the cycle, I don't own any NVIDIA. I have owned NVIDIA multiple times previously, but currently I'm very much a bull on AMD. But a lot of people that have been in NVIDIA for very much near the beginning, they're like, you know, these companies spending all this money. Yeah, of course you have the CEO of NVIDIA saying, oh, you know, our growth cycle is going to go on forever and ever and ever. Of course you're going to have a friggin' CEO say that. Do I believe that Jensen knows that when these companies pull back on money, NVIDIA is going to experience a pullback or maybe a crash? Of course the guy does. He's not stupid. He just can't come out and publicly say it. If you are a perma NVIDIA bull, you got to face reality. And reality is that when these phenomenal companies pretty much stop spending their money, a flip is going to happen. Microsoft, Amazon, Google, Meta, they're the companies that are going to be, people are going to be buying like crazy, okay? Now, the one thing about Google, and if you are a Google bull, you're probably going to dislike me a lot for me saying this. I've actually never owned Google before. Oh yeah, I've actually never owned Google. Would I love to own Google? Oh, I definitely would. Is Google attractive for me right now? No. Why? Spending too much money. Spending too much money. There's no clear stop on when the money's pretty much going to be stopped for them. And for me personally, I need more clarity on when all that money is going to come to an end by spending. And I also want their cash to very much move into the positive where they're not spending more than they're making, okay? So when that flip pretty much happens, sure. Now, Meta, I am a shareholder of, and I've been a shareholder of Meta multiple times. I would rather buy more Meta than I would Google. Why is that? Honestly, I'm a little biased. I really like Mark Zuckerberg more than the management team at Google. Hey, it's the truth. Mark Zuckerberg, I'm 38. The guy is 40, 42, 41. He's a millennial. The guy is in his prime. Meta has a tendency to experience a more volatile crash to the downside. So if Meta starts going down, let's say Meta raises up CapEx and Meta goes down to 500, or Meta goes down to, let's say, maybe 400, or something crazy like 300. I did not take advantage of Meta during the crash of 2022. Oh man, I really wish I did. I really wish I did. But let's say if Meta goes down to 300 bucks, I myself, I'm stepping in and I'm going to be buying hand over fist amount of Meta. Hand over fist amount of Meta. Now, my Meta position was actually a lot bigger earlier this year, and I actually did take a lot of profits on Meta this year. My Meta position was actually up by close to 20%, and I ended up scaling out a little bit, and I ended up putting that money into AMD, into SoFi, Robinhood. So the money is in good places, but the reason I scaled out a Meta earlier this year is because Meta's CapEx just went up even more. So it's really pretty crazy, right? So that is really my spiel on Google. But I mean, otherwise, Google as itself, it's a phenomenal company. Utterly phenomenal company. They're just spending way too much. Okay, now moving on to ServiceNow. Wow, that was definitely 22 minutes talking about one of the world's greatest companies, and will be one of the world's greatest companies. But they're spending too much money. That is pretty much about it. Okay, that is the biggest and hardest thing that a lot of people are really having a hard time with. It's the money spending. They're spending more money than they're producing, okay? And it's starting to show. So therefore, people know that, hey, Google and other companies, we're getting close to this AI build-out cycle. What inning are we in? If I had to take a random guess, I'd probably say maybe we're in the 6th, maybe 5th inning. 5th inning to be very, liberal, maybe 6th inning to be conservative. If you never watch a baseball game, you got, the bottom of the 9th inning, theoretically, is theoretically, it could be the top of the 9th. But you got the 9th inning, which is the last inning, right? We're getting closer and closer to the end of the ball game. What's going to happen at the end of the ball game? The chip stocks are going to crash. Yeah, they're going to definitely lose momentum because the money is going to stop coming in. Nothing is forever in the stock market. You have to do your due diligence when you're learning this stuff, because that is how you capitalize on all this stuff that is happening. The money is going into one area, it's leaving another area. Don't disregard the area that it's leaving in, though. Don't disregard Meta, don't disregard Google, don't disregard Amazon and Microsoft. They are phenomenal companies, and when they stop spending such crazy amounts of money, then those companies are going to be so attractive. But right now, they're just not popular in the sense they're spending too much money. What are popular are the chip companies, or any company that's very much related to AI. Okay, so ServiceNow. ServiceNow, we are down we're down by 1%. We're actually up at the pre-market, very much up by over 100 bucks. I believe up by 5-6%. So this is directly from their website. if you are ever unsure of where to get their earnings from or a company's earnings, my recommendation, and I'm not a financial advisor, but this is common sense, go to their website. Type in on Google. Oh man, no pun intended. I just spent like 20 minutes talking about Google. Type in on Google pretty much like ServiceNow's earnings, ServiceNow investor relation page, and this is what ServiceNow is pretty much given to us. So straight off the board, let's go ahead and read this. ServiceNow beats high-end guidance across all Q2 2026 top-line growth and profitability metrics, raises full-year subscription revenue outlook. ServiceNow is a subscription-based company, and also very much AI-integrated company as well, too. Very bullish on this company myself. Subscription revenues of 3.8 in Q, representing 24.5% year-over-year growth, baby. Woo! Let's go. Yeah, okay. So, I mean, you're talking, that is a pretty strong number, is it not? Like, you want to talk, like, okay, so keep it simple. What would you rather invest your money in? Would you rather invest your money in PayPal that grew 4% year over year? Or would you rather invest your company in a stock like ServiceNow that grew by 24.5%? Okay, obviously night and day difference, okay? Very much big difference. So ServiceNow, I very much consider, and they also consider themselves to be a growth company, but to very much be a solid growth company, you got to be bringing in like very much great, phenomenal numbers quarter after quarter to beat year over year. Very much having like a 30% growth rate is very much like a key number for a lot of growth investors like myself. But I mean, 24.5%, sure, yeah. I mean, it makes me excited. What else is happening here? Total revenues representing 24%, very good. Current remaining performance obligations representing 21%. Anything else here? So basically, pretty much, you get remarks here. A lot of this is forward-looking guidance, which, going back from very much the first page, is all bullish, raising their forward-looking guidance. Everything is here. Scroll all the way down, and if you are unsure about how to actually read, like, a balance sheet statement, some companies actually put this up, not all, but you want to pretty much find like the overall breakdown. The biggest breakdown, I believe it's on page 11 here. Yep, here we go. So pretty much you see a balance sheet kind of like this. It's a full-scale breakdown of pretty much everything. And let's go ahead and look at just their top line. Pretty much like the top line of everything. Total revenues, right? 24%. Obviously, this is very much represented in the bills, so keep that in mind. But then again, it doesn't matter if it's a B. It doesn't matter if it's an M. You could very much be invested in a very small cap company. Yeah, there are publicly traded small cap companies that are very profitable. And sure, they don't produce billions, but they produce tens and tens of millions, and they grow very quickly. Phenomenal companies. I actually owned one earlier this year. So I mean, there's plenty. Don't get discouraged if a company is a B or an M. Okay, just look at what they're doing, and right off the bat, 24% total revenues. So very much. Oh yes, and by the way, it says unaudited up at the top. So understand that when companies do release this, they do get audited, but at the same time, the reason why it will say like unaudited is because there's a lot of like good faith that does happen in the market. Now, have there been scandals before? Like Enron is a very famous scandal many years ago, over 2 decades ago. Definitely research Enron. There was a lot of hanky-panky stuff around there, and obviously the accounting firm that pretty much was handling Enron, I believe they also got sued and went bankrupt too. Then, of course, you also have the accounting firm that did Bernie Madoff auditing as well. I believe they also got sued and also went bankrupt. So that's one of the reasons why it will say like unaudited up here. But understand that if something is inaccurate, like maliciously, people go to prison. And it does suck because shareholders do pay the price on criminals. But you always got to keep that in the back of your head. And that's the reason why a lot of people have like negative opinions about a lot of publicly traded companies, because they don't want to fall into like an Enron pretty much scandal or trap. Okay, so what else do we have here? Subscription very much up. Cost of revenues. So subscription very much up. Professional services and other very much up. Total revenues very much up. Gross profit up a small sliver. Don't quote me on that, but I believe gross profit 13%. To be honest, when I go over these in the future, I'm very much probably going to have like all like hard numbers here, because I'm not gonna lie, my mathematics still use a calculator, man. What else? So moving down here, we got operating expenses. Okay, this is where it's throwing off a lot of people. Operating expenses. Okay, sales and marketing 22%, research and development very much up. Then we also got general and administrative. That is also up. Total operating expenses. Income from operations. Very much down. So, I mean, looking at this straight off the bat, their operating expenses are very much going upward, which is not necessarily a bad thing, but it is throwing a lot of people off. And one thing about it is what ServiceNow did fairly recently within the last year is they did make an acquisition. And they actually got into very much like a cybersecurity acquisition. So a lot of times when a software company does make an acquisition of like a different company per se, what ends up happening is that it will affect their balance sheet. But a lot of people on the street are very much talking, saying, hey, are their operating expenses up because it's becoming maybe a little harder to get people to buy their subscription? One stock that I did recently buy into was Netflix for the second time. I did actually own Netflix earlier this year. Sold for a little bit of a profit because they did rebound a little bit. But I did rebuy into Netflix, and this time I'm actually going to stick around very much longer, not looking to trade Netflix. But Netflix earlier this year was definitely very much a trade for me. But as for ServiceNow, I feel very better being in ServiceNow because it's very much more AI based than Adobe. I ended up selling Adobe for a loss about a month ago now. And the reason why I did is because the management team jumped ship. CEO is leaving. The CFO is resigning. I personally don't want to be there for a new management team. But the thing about ServiceNow is that their CEO, Bill McDermott, he is very, very driven to continue to align ServiceNow to very much be the AI software type company. I really love software-driven, subscription-based business models. Netflix, I love their business model. It's subscription-based. But as for Netflix, hypothetically, so Netflix is coming down on their pretty much compound annual growth rate. And the reason they're coming down is because of exterior problems such as energy is more expensive. Netflix, the daily consumer, if they're spending more money on energy and also at the gas pump, probably spending money on Netflix may not be the most attractive thing for the average person. So, as for ServiceNow, though, we're going to really have to see pretty much if their operating expenses continue to very much go up like this, or if it's just very much the norm. And this is something that I'm willing to very much take. It's taking a risk. You take a risk no matter what you do in the stock market. But ServiceNow is just very much more aligned to AI integration in their business model than other software companies out there. So I really feel that ServiceNow is definitely going to be, definitely in the next couple of quarters, they're probably going to have probably less operating expenses. And who knows, maybe in the future, I could be dead wrong or I could be dead right. But I don't really, nothing about their conference call, nothing about pretty much like, and by the way, their operating expenses were addressed in pretty much like immediately. And their CEO did give an answer that, hey, we're going to be seeing pretty much the scale of, expenses pretty much rise for the next like 2 quarters. And then things will be coming down a little bit. So hearing that does, it calms my worries, but it is a risk factor as well too. Otherwise, I mean, the company is growing. It's just some people want the AI fear to pretty much go away, and that's really my philosophy on ServiceNow. So, am I adding shares to ServiceNow right this minute? To be honest, I'm really not. And the reason being is because just in case ServiceNow goes down even more, I definitely want to potentially pick up more shares. But the thing about ServiceNow is that they're probably going to really much remain stuck around this range. Very much trade a range, maybe between 90 to maybe as high as maybe a little bit above 100. They very much need a breakout where a lot of AI scares goes away, and pretty much anything that is on their balance sheet, like operating expenses increasing significantly, maybe that stabilizes or decrease. But then again, the company really needs to show Wall Street saying, hey, if operating expenses are going up, but our revenue is continued to scaling up, is it really problematic? Time is going to tell. I'm going to wrap up today's video with this. Stay motivated in the market. We got earnings left and right all throughout the next couple weeks. And do your due diligence like I have and continue to do. Yes, buying stocks, especially now, very scary, very red. I mean, hey, it's a scary time. But my philosophy is very simple. When it is a scary time, sometimes that is the best time to be buying great, phenomenal companies. I'll see you all on a new video tomorrow. Later, everyone.